Which side? Some days. I'm in a good mood today. You can't hear me, really? Hi, Jira. I don't know why you can't hear me. Can you hear me now? You can hear. Cheers, mate. Must be somebody else's problem. Welcome aboard, and that's no problem, Angel. And happy hump day to you all. I hope it's been good thus far, and maybe if not, it improves in the next few hours. Let's hope it starts with this one. Um, Interesting day. We've had a few breakouts. The question mark upon them now becomes for me, as always, are they real? Are they false? And how are we going to make some money out of that? So let's investigate. First up, the breakout that has already occurred on pound US dollar, which of course precludes us from taking the breakout trade. By definition, if it's already broken out, how can we trade a breakout? Um, Cheers, Paul P. The bad news, of course, is that had we traded yesterday the breakout, we would have entered. Actually, what was the 9 o'clock bar? That one, yeah. We would have entered the market here. The one thing I didn't want to do, if you'll recall, because of an untested daily pivot, and as always, not as always, that's a terrible thing to say when you're talking markets and trading. There's no such thing as always. But I didn't see that either at the time. 3 little Indians. Wow. And look what happened, as is often the case. As I was saying, as is often the case again, we did get a bounce off the daily pivot, but bang, it lasted a very short amount of time. Wonder, was that tradable at all on a smaller time frame? Not really. No, you would have had to go outside of my rules to trade that. 15-minute chart, we'll try anything here. No. Well, maybe double cross there on a 15-minute chart. There was potentially an entry. And what day was I just looking at? Goodness me. That looks like a 30-minute entry, doesn't it? But it's not the case. Those two candles, 30 minutes, do not make. So no break below, retest, still no entry. But the breakout trade would have caught it. And at this point in time, I think you'd still be in that trade if that was the case. So enter here, stop loss here, 2 seller bars after entry, stop loss there, 2 more seller bars, stop loss there, 2 more seller bars, stop loss there, 2 more, stop loss there, 2 more, no improvement, 2 more, stop loss here. So your stop loss would be there currently, risking 40 odd pips, I think it was. Let me work that out. There to there, 39, let's call it. You would currently be up just a little bit better than 1-to-1. But of course, under my rules, you would have taken profit up here. So you'd be around about half, a little bit better as 1. So it's not that dramatic, I suppose. But gee whiz, it would be nice to have caught it. And who knows where it ends, of course. So because we're broken out in the candle prior to open today, there will be no trade. Let's monitor, however, what would be if we were trading a breakout. Again, the last thing you would want here is to be triggered in short. Well, sorry, the last thing I would want would be to trigger it in short, because we've already gone, what's that, 52, maybe 70 odd pips today. Have we? Let's see. Yeah, very close to it, 68 pips today. We've already travelled. ATR, let's do the exercise just for fun. ATR currently, hang on, we'll go to the daily first. Indicators, ATR, 20 days is fine. Current ATR is 94 pips. We've gone, how much did I say? 92 pips. And we have gone already. Let me go there. I can measure it better. Already gone 72 of those 92. So, you know, do you really want to enter here and pick up 20 pips? According to the ATR, of course, it can go 220 pips. But according to the ATR, you're playing against the likelihood or against the probability, in my humble opinion. Pound and euro dropping because of more pandemic cases. I really don't know, Gyro. I think that's a question for Ash. I don't know. As you know, I spend most of my day out in the paddock doing things with bamboo. So I've got no idea what's happened overnight. Certainly interesting. I think it's more, or is it a dollar story? I don't know. No, doesn't look to be. Euro dollar's okay. Euro dropping on what? Everything against the Swissies having a field day today. There's no question. I've noticed that since I've sat down. Aussie Swissies off, dollar Swissies off, Euro Swissies off, Swissy yen. Now this is interesting. Swissy yen, I'd love to pick this up. This is looking very much like it's taking on these highs, obviously. Very much like a case for me. Why? Because it doesn't like it above this level, as we've seen many, many times before. So I'll be watching that with interest to see if we can pick it up on the way back. Swissy yen, I like it. So I really don't know, Gyro, what's going on with the euro and the pound per se, but I'm not seeing it across the board. Euro Aussie and Euro Kiwi, as we anticipated, look to be on a bullish track. Euro dollar is consolidating. Pound obviously is having a worse day than most. I think it's a pound story at the moment, not so much the euro, I think. If I was trading the pound today, I think there's probably a scalp on. Probably a scalp on. If we have a go back to the hourly chart, you can see since yesterday it's just been a waterfall, basically. Not much of a spell here then, or maybe through US session and through Asia session this morning. Then bang, where we've gone again. This probably already missed the scalp if it was available. Hit a level here and away you go. Not that I'm a scalper and I just don't do it. It's too much on my nerves. Can't handle it. But let's go to something that I can handle. Update you on a few things that obviously there are, and I'm pretty sure you guys have got the gist by now that my MO has changed somewhat in that I only nominate maybe 4 pairs, maybe 5 at the beginning of the week because they're the standouts to me. Sometimes there might be 1 or 2 only. But that is now my new MO. I'll concentrate on those pairs going through the week because I've got a firm belief that there's a direction to be had at some stage. May not be early in the week, maybe late in the week, could be in the middle of the week, who knows. But once I've identified that, that's kind of what I'm sticking to. There are a few that come up day to day, like there was today. Aussie Kiwi is that pair today, and I did place an order Aussie Kiwi. Long, there it is, if you wanted to follow it. It's a buy at 108.76. Stop loss is at 108.42, and TP1 is at 108.97. The analysis behind this is pretty clear. So actually, no, that's not true. The analysis behind this is actually combative. So I can make a case for the long and I can certainly make a case for the short. But with the slingshot, I also pay particular attention to candle patterns. And the candle pattern that I'm seeing here is very much out of the slingshot textbook. and suggests to me that if price goes back in this direction, it's going to break through this trend line and head towards the highs. May not get to the highs because the highs are showing me very, very clearly that we've got a double top here. And it doesn't matter what time frame you look at, that's in evidence. Certainly the daily is the case. And this bar here is extremely interesting, but very indicative of what you would expect to happen, because once we've hit a support level, what happens? We bounce and go back to resistance. That's what's happened. And I'm suggesting that this is probably going to stay in this range for maybe the entire week. I don't know, unless there's some trigger. I would have expected the RBA to be that trigger yesterday. I don't think it was in evidence anyway. My gut tells me it was. In fact, we should be seeing an Aussie rally, in my opinion, based on that RBA statement. But the market's disagreeing with me, and that's fine. So I've got a real conflict here. You can see the breakout that took place above this area here and went into a double top, came back and retested it with interest. Or was it with interest? It really looked at the monthly pivot, but hasn't bounced any further than the weekly. Also in that process, it's given us a completely, if the monthly pivot wasn't there, I'd be short this for sure, because we've got a beautiful reversal bar that is white body. The only issue I have is we're still at this level and we can't trade through there. There's no room for profit here. The trade line, which I expect to be tested at some stage, is a fair distance away. So we could actually pick that up if you wanted to trade this short and take the risk of going through this low. I think that's entirely possible. You got a 58 pip risk. Depends on where you hit it, right? That's the problem that you've got. Well, there's two problems you've got going short. That's one of them. Is this takes, consolidation for a few days in a row. Well, let's say in the next 5 days, week or so, you've got very little going for you here if you place that order. Love the candle. Love the fact that it is a lower high. But yeah, it's just not on. Can't trade that. Does that mean it's going in the opposite direction? Well, not necessarily, but like I said before, I do trade candles as well. And this candle pattern is telling me that we've got to bounce off the monthly pivot. We've got to break out of that range. We've got a retest of that range. And if we go back to this area, I think we're probably going to test the highs again, but certainly that level where you can see that that first take profit. So that's Aussie Kiwi, and I am bullish the pair anyway. So that all helps. That was the trade this morning. The trade we took yesterday, pound Kiwi, has hit TP1. That was the sell order. And look, this again can go one of two ways, and it's exactly the same scenario. I probably don't need to describe it to you because of what I've just said. The one thing here that is a little bit different is that bar there is completely bearish, whereas Aussie Kiwi, which chart we're looking at, that one there is, well, arguably bullish. It is a high test bar, but there's the main difference. Other than that, there really is very little difference in these two pairs. We are coming off the top here, no question. And in my humble opinion, we're going back to here because this is a beautiful confluence area apart from anything else. You can see that if we went there quickly, of course, would be a beautiful confluence area. A little bit higher, I guess. If you go to the highs, the confluence area becomes there. I totally see that in my vision. And maybe that's where we need to focus in the short term. And that's where I am focused in the short term. We were, I guess, fortunate to pick this up because there really was no lower high at that point. This is the lower high. But as I said at the time, we may miss the move if we wait for that lower high. How did I know that? I didn't know that. There's no such thing as knowing it. But I guess if you see it happen so many times, you get to the point where you've just got to take that on board, although it's not the perfect scenario. And that's exactly what we did yesterday. So we did pick that up early. It may yet give us a lower high based on this tweezer top. I'm hoping that's not the case, obviously, because it'll be taken out of the trade. But that confluence area that I just mentioned is definitely the target area. And I'll be looking for longs at that point as a bounce. And this would be really nice if that were to be the case, because as you know, we're already in the long and have been for some weeks now. So that's pound Kiwi. Aussie Kiwi we've covered. Kind of in that area, isn't it? It's one way or the other, not 100% sure. I'm going to be pretty peeved if I don't get into this long on Euro Kiwi, because we traded this last week, remember, took an early take profit because we got, I think it was in 2 pips maybe of our TP1 with this bar. And we decided to take our early take profit, which was a pretty decent thing to do, in my opinion. Maybe not, because we'd still be in the trade, but we wouldn't be at TP1 yet. So I don't know. It's a 6 of one, half a dozen the other. I slept well over the weekend because of it, I can tell you that. Now, however, I'm really wanting to get back into it, but as yet I don't see a way to do that. How do I find a way in? Well, there's 2 ways, as always. It's a break of resistance and a retest of resistance. So that's in play, or a false break of support. Sure, you guys are sick of hearing this, but it really is the only way I trade. It's either a false break going in that direction, a false break going in that direction, or it's a break and retest going in that direction. You know, I don't know why people get confused with the way I trade. It really is the same thing every day. So that's one that I'm really keen not to miss. I'm not sure how I'm going to get into it, though. It's got to come back here, I think. It really does, and give me a false break, which would still be in my opinion anyway, the big bullish rally, the retest, higher low, higher high. I still think we've got a higher low down here based on this one. If we can create a false break, that of course will be the best case scenario. If it doesn't happen, it doesn't happen. I would be less inclined to trade it as a break and retest, but I probably would, given the circumstances that we had. I better get rid of that. That's well gone anyway, but that's the one we traded last week. Euro Aussie is exactly the same, in exactly the same boat. And you'll recall that we were comparing these 2 last week, and we figured that Euro Kiwi was the best because I thought the Kiwi was weaker than the Aussie, right? Remember that? That's all. It's all now in the past, of course, but nothing's changed. We're still inside these 2 bars here, or if you want to put it a different way, go to the weekly chart. We're still inside that bar, and that is the most dominant bar in the last, what, year? Getting towards a year anyway. So that's telling me something. It's telling me that there's action going to happen here. The most likely outcome is a bounce off the bottom of this channel. So that's what I'm focusing on. And that was what I was focusing on last week, but we opted to go with Euro Kiwi over Euro Aussie. And as you know, we got a TP1 and then it went sucked back like tomorrow. It wasn't even existing. This is now breaking out, potentially breaking out on a slingshot pattern. That high test bar there was eminently tradable. Why didn't I trade that? Because reward to risk was pretty crappy. So your risk on that, you probably had to put it down here, 200 pips. Rewards about 40 before you hit those levels. So that's why I wouldn't take that trade. I'm not sure how I would trade this now. It probably has to break this level before I could consider it. The trend line's interesting. If we got a nice little entry off this retest, then maybe we could risk it as long as we can take profit before that high. I think that would be reasonable. But we've got to take this one out first. So I don't see an opportunity there just yet. But, you know, if you look at the charts, you'll see this time and time and time again. And I think Julian first pointed this particular repetitive stream out to me about 4 years ago or something. And I actually was trading it without knowing what I was trading for many, many moons. But now I understand it completely. It's very much a case of every time you see this, you've just got to have something on it, because this is really powerful stuff. Big bullish engulfing, beautiful retest, give you the double bottom, then give you the higher low. Yum, 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 yum. That's what we traded last week. Still in the Aussie? Are we still in the Aussie? Why isn't it on this chart? Okay. No, I'm trading this on another account. I'm actually long the Aussie on another account, but I'm, like I said yesterday, when Jaira, you asked me the question, it's very difficult to be long until you're above the monthly pivot and this trend line. Very difficult to be long, because really what you've got is a neckline break and retest. It's a double pump on it, even makes it probably even more palatable than otherwise. But finding a way in from here is really, really difficult. But there it is. All we need now is this candle to close in an hour and 45 minutes, anywhere where it is, or even a little bit lower, I wouldn't mind, and then a retest of the confluence area. That's going to give me a short bias. I can see Ash his mouth watering here, seeing a left shoulder ahead and a right shoulder over here, and he's thinking, wow, can we get into this long? Can we, Ash? I don't know. What do you reckon?
The Aussie, not right now, in my opinion, mate. No, I mean, the Aussie is getting pretty beaten up across the board.
It is.
I like the Aussie as a longer term play, but I think it's a bit early. And what I'd quite like to see with something like that, I'd quite like to see that right shoulder really form over a long period of
Down
time.
to here
Because
somewhere.
that would be okay. I mean, I'd probably want to draw a channel between the highs and duplicate that channel and get it on that lower line on the 25th of March to kind of get an assumption of where that low might come in. But the Aussie just, I suppose that the RBA statement, I had a good read of that RBA statement yesterday. And it's interesting, isn't it? Because there's no doubt that the Aussie's fundamentals are strong. The big issue really for Australia is, as you pointed out yesterday, was where it is in the trading range. Stance doesn't seem to be changed. And we're kind of in that balance point where the question really with the Aussie is, has the value already been taken in? Is the move, has the fundamental kind of growth in the Australian economy effectively been priced in to where
got some more good news overnight, didn't it, though, with the IMF ratings coming out?
Yeah, there's no doubt, mate. I think the Aussie is a solid currency, and I think you buy the Aussie, I wouldn't have thought you're not going to lose money. I think the Aussie is a really good performer, and I'm definitely interested in buying the Aussie. But you would probably have to kind of extend your timeline for right now. I think buying it now, it doesn't look like, after the drift to the downside, it doesn't look like it's bottomed out as yet. So if it can bottom out, then the Aussies are long, all day long for me. I think it was ahead of the game in containing COVID, and as the world starts to grow, you have to say that the Australian dollar is in probably the strongest position, out of all the currencies. So along with the
certainly in the semi-finals, isn't it? Really?
Yes, exactly. So I'm definitely a buyer. It's just about timing. I just don't think the timing's there yet. So because I'm seeing the Aussie coming down against the euro, down against the Swissy, and looking like it's coming down right now against the dollar, what I'd like to see is some consolidation, just a bit of sideways price action before getting in, because the trend is when you're looking at this Aussie dollar, what chart have you got that on?
4 hour.
The 4 hour, yeah, the trend on the dailies have been to the downside. I'd actually be a lot more comfortable if it started to shift a little bit on the dailies, because that head and shoulder, that wider, broader pattern there is the concerning one.
Yeah, and like I said, it hasn't got above that neckline again yet, and it's had a double pump on it. You've got to be thinking short-term short, in my opinion, at this point.
Yeah.
Anyway.
Yeah, I think so.
Yet,
I think so.
If it gets above that that trade line or the neckline and the monthly pivot, different story.
Yeah, I'd go with that, mate. Definitely would go with that.
We'll see. Anyway, what's happening in your neck of the woods, mate?
Well, I'm just watching some of these stocks. There's been a really good performance so far this morning on the FTSE. So let's share some screens with you. I've just got my eye on a stock down here that's.
I'm in a pretty good mood today.
You're in a pretty good mood?
Yeah, I've been listening to "Gonna Have a Good Day Today."
Oh yeah. Did we find out who it was written by?
Oh, we know. I know that.
Oh, you do?
That's going to be a question, isn't it?
Yeah, but we're meant to be telling everybody first, so they use their memory.
Oh, are we really?
Yeah.
Okay, well, it's not Long John Silver.
It's not Long John Silver, yeah.
It's not Goldfinger.
It's not Goldfinger.
No.
Okay, is it James Bond?
No, you're missing the point. It's precious metal. Or precious commodity, sorry.
Oh, okay.
The writer and the singer of the song.
Oh, I've got it, mate. I've got it. Neil Diamond, isn't it?
Track. Sorry?
It's Neil Diamond.
Oh, that would be the answer, yes. Okay.
Yeah, Neil Diamond. But we nobody knows there's going to be a question yet. Well, they do now.
They don't know what the question is going to be, though.
No, they don't. Well, what's the name of the song?
That's going to be the question. So if I'm you and you want to answer this question tomorrow when we ask it, I'm going to Google Neil Diamond, "Gonna Have a Good Day Today," and enjoy. That's why I'm in a good mood. It's a nice little bouncy song.
You had a good listen to it.
Yeah, but watch it as well. There's some nice little images in there too.
Okay, so what Jeff's referring to is that we are going to start having a little quiz from tomorrow. So SWOT up on, it's all financial. We know, so we're going to have the stuff that we covered in the show for the week is we're going to have a quiz every Thursday, just for 5 minutes or so for a bit of fun, just to see how much our memories have been kicking off. So there'll be sort of things entered that we discussed in the show.
John, you totally would be Long John Silver, wouldn't you? I bet you've been called that many times. It never crossed my mind.
You need to be a silver trader, John. I think that would be your perfect name for your company. So let's have a look at some of this stuff, mate, because I'm forever interested in Bitcoin as I try and chase a trade in Argo blockchain. Really interesting news from those guys today that they are now getting into the NFT space as well. Or there's an IPO for a company actually that is launching pretty soon. But it is the founders of Argo blockchain. So I'm not sure what the financial connection will be when it comes down to their balance sheet, but I do think that's of great interest to me. So cool. I'm watching out for Argo blockchain, and that means I've got to watch Bitcoin. Now, Bitcoin's been under a little bit of pressure recently, as you can see, but it hasn't collapsed, by any stretch. It doesn't seem to be going anywhere but sideways at this particular stage. It's got to get through this level here. I'm still interested to see whether it gets down to 45, but I suspect 50 is about as good as I'm going to get right now, down to this particular area here with Bitcoin. But I'd love it down here, down at the 45s. It just puts it in a fantastic spot, in my opinion. So I would like to keep my eye on Bitcoin. I mean, we've definitely seen it struggle to get above this level, and there's no doubt any explosion to the upside will probably have some momentum. And considering what Shukri was saying yesterday, I think it's probably, if it's going, it's probably gone. So Bitcoin continues to be watched. The other one is oil, of course. This head and shoulders pattern is a bit ominous as well. So what we're really seeing right now, mate, is a two commodities, if we count Bitcoin as a commodity, or two products. Let's make it nice and broad. Two products that have had an incredible run to the upside, having a bit of a pause. And the question is, does the pause become something more sinister? And the truth is that it's very rare that it would. When it comes down to WTI, where I think the interesting buy point is right on the neckline, so down around about 56. I think WTI becomes of interest. If we bring the same thing back with Bitcoin, then again, this is a sell zone, if you like. Could be a trend line running along here. So as I say, it may not get to where I need to get it to. What I was kind of hoping is that this becomes like a complex head and shoulders, where we see a couple of double peaks up here. And if we saw a double peak up here on the high, then that would suggest that this could be one big head, which again would bring it back down to this level. And I don't suspect that level is going to break to the downside. But I if it came down to 45, I'd be all over it. It's just a question of, can it happen? Can it and will it happen? Don't know. Just don't know. So the best I can hope for is maybe 53, maybe 53, possibly 50. It could come down to that particular point, but Bitcoin is a buy, but just not in this area. So I've got my eyes on that. What else have I got my eyes on? The FTSE 100 is having a grand old time at the minute. Looks like it's surging back to these highs at 68, 60 as well. So I wouldn't have thought the FTSE is. It doesn't look like the brakes are going to be on the FTSE anytime soon, and it could eventually break out at that particular point. Things have been going okay, and particularly when we look at some of the correlations with the FTSE, and not necessarily the best, but yesterday huge big surge to the upside on the euro pound. And right across the board, when we're looking at the pound, really big sell-off with the pound yesterday, and it has helped the FTSE. Certainly helped the blue chip stocks, not the.
We were supposed to catch that on the breakout, and we didn't.
Ah, okay, mate. Yeah, didn't trade it. Was that because there was no setup?
No range.
No range. Okay. All right. Well, that happened.
It's already broken the range, basically.
Yeah, we're okay to wait for that, but downside with the pound yen, and you can see again it's in a buy zone, but I think this is quite a significant candle here. What I'd quite like to do is just have a quick look at, even though it's not the best on MT4, let's just have a quick look at the volume. Yeah, look at that. There's a bit of a pickup in volume there as well. So I think signs and signals that the pound is weakening here. Genuine signs and signals. There was big sell-off there. Looks like a pickup in volume if we compare the last the few days before it as well. Just back from the Easter break. Big pickup in selling volume there. So the pound is looking under pressure. When we're looking at the charts, I think the pound is looking like it could be the one that is going to miss out. Again, a selling pressure there with volume. The one I thought that was the most interesting was the gold trade with pound. So gold moving to the upside against the pound, and if anybody is looking at gold, it looks like the pound might be your huckleberry, as Val Kilmer would put it in that film that I can't remember, but the pound looks weak, and for that reason the FTSE is looking in good shape. But the Nasdaq had okay. Yesterday didn't end up being that decent, but it has had some decent upside, and really the S&P, we've seen the S&P continue to push as well. Bit of a pause so far today. But the FTSE looks like it's playing catch up. Now, if we look at some of the other European stock markets as well, that one's broken to the upside. The CAC on has broken to the upside, as has the DAX as well. Bit of a pause yesterday, but it's the VIX, which is the interesting one. Look at the confidence currently in the market. The VIX is just dropping and dropping and dropping and continuing to drop. So there's very little at this stage to be too concerned with, except for confidence itself. And that is really, the way I would look at the overconfidence that's in the market is just to make sure that when you get far enough away from your entry point, you definitely put your stops, in the right place. Because markets like this, if there is any kind of shudder, they could drop pretty fast. But there's no point in playing that. There's no point in us playing for it to drop, because we could miss out on an opportunity for at least another month. I can't remember Gordon's date, but it's at least a day in May. We're not looking at
that crash date.
Yeah, the crash date. When was that? Is that
May
the 24th?
14th.
Thanks, John. So we're looking at least another month, and there's no reason for us not to take advantage of the upside that the market is providing. Interestingly as well, that the COT data really points at a stronger yen. It's not at an extreme at this particular stage with the COT data. It's not sort of saying go out and buy the yen today, but it is saying look for those bottoms in the yen. And if we look at the dollar yen is playing out in accordance to the COT data. Now, the COT data by no means is a timing tool, but if you look at what's happened this week, the yen is, the dollar is struggling against the yen, and this is based on very, very little foundation. And if we think that markets, foreign exchange tends to be kind of rangy. If we look at the range here now, I don't know whether we're going to get the absolute range points here, but it's kind of within this band from the last year or two. But let's just have a look at that on the monthly. Might be a bit broader. Actually, that's all we got. But there is this trend line coming through here as well. So there might be a few points here. Trend line coming through there, which looks like a breakout. There's a trend line here as well, which is that little bit higher. Possible slingshot here, mate, if this came back up next month.
What chart?
Close down. This is a monthly chart on the dollar yen.
Yeah, I think there's a trade above the red bar if the red bar remains decisive.
Yeah. Yeah, so there's a possible trade there, but what about? Well, I mean, I was wondering whether it could be a downside trade if we close down into the range and then move back up again without getting above. Could there potentially be?
Because what I'd like to see is the break above be maintained for a couple of bars.
Yeah.
Then the market moves back underneath, because really what that means, to my mind, is that big bull bar that's broken the trend line is an emotive move of some description. I've got no idea why. But if we then get consolidation and it doesn't go longer, what it means to me is that emotive move is somewhat cancelled by the market's consideration, which equals consolidation.
Yeah.
And therefore, after that consideration, the market then comes back underneath there and gives us a retest from the bottom side. That then means to me that that move is done. They're out of it. They don't want to know any more about it.
Yeah, Jira's saying it could be an ABC for a long. Yeah, you're absolutely right. Yeah, I'm with you. But anyway, but the COT data suggests long on the yen, and so far it's playing out for the week. And the fact that we're at the consolidation area, I'm quite interested in taking a trade here at maybe 110.15, something like that. I would starting to maybe build into some positions with dollar yen on the short side, but the way I'd want to play it is, and I've been thinking about the COT data quite a lot recently, because the COT data sends out signals very, very early, but it tends to be right in the long term. And the strategy that I'm thinking of utilizing with the COT data is to look for these extremes and only trading. So if you get a signal and it's kind of halfway up the bar here, I don't think that's of any interest. But if you get a signal when it's here, then we start to look, or where we are right now, then we can start to look for opportunities. Now, I wonder whether this one's any good. I don't really like the trade line really, so maybe it is at 112 or something like that it starts to get more interesting. Let's just have a look at the weekly. Actually, the weekly would probably just about qualify. You know, I think there's probably enough there to suggest that that there is a tradable opportunity. So moving back up here, now it's below this particular trend line. I'm probably a dollar yen short. But I'd like to see what happens with the yen. Pound yen is coming off a little bit as well, and it's probably worth comparing. You know, having a look at which is likely to be the best currency to trade against the yen. But I'd like to see strength across the board really with the yen. But you can see that the yen is, you know, it has had some strength so far. You know, we're in a couple of days so far, but it has had some strength. You know, all these are weekly bars and they're all red. You know, looking at these, so little bit of strength with the yen. The CAD's also another one that I think it could be under some problems. Swissy yen completely different, but this is basically saying that the Swissy is probably the strongest currency right now.
It is, but yeah. It's having a field day at the moment. Yeah.
It's having a field day, yeah. But COT data does not drive me towards the Swissy, so that's why I'm focusing on the yen right now.
Well, if you look at Swissy yen, and sorry, I can't see your chart at the moment because I'm chatting elsewhere, but I'm certainly listening. Are you on Swissy yen?
Yeah.
Yeah, look, why now? Why would it break that level now? What's driving a Swissy yen breakout? Why?
Yeah, absolutely. Well, I suppose...
So if that's not going to happen, what I'm saying is if that breaks, it breaks fine, but it's more likely to be a false break for mine than it is to be a breakout.
Well, again, let's have a look at the volumes here. Yeah, it's not really through anything, is it? You're absolutely right, and it kind of suggests that we could be looking at a high of 118.80 possibly.
Yeah, if it gets through those other highs, if it gets through these, for a long time, you know.
Yeah. But I did have a good look this morning, mate, and I was looking at, you know, something. Could I bring anything to the table for something shorter term? And there was nothing. There was nothing setting up. So I'm kind of on my hands at the minute, just waiting for some stuff. Certainly waiting for Bitcoin to help me out a little bit and allow me to get into what I want to get into when it comes down to some stocks. But aside from that, I'm on the sidelines and waiting.
Yep. Look, that's where we spend a lot of our time, of course. So there's no real surprise there. Another person who, of course, is on the sideline and has been for ages is Ainsley. And I was hoping that she'd be in the room today. I haven't got a message from her saying that she won't, but I don't see her in the room, sadly.
Oh, okay, mate.
Maybe she'll pop in a few moments' time, in which case, of course, we will go to her.
Yeah. Yeah. Well, in that case, let's talk about gold, because gold has been in this also potential consolidation area here. It looks like a double bottom. Well, it is a double
looks
bottom
like
down
a
here.
classic to me.
Yeah.
All that I'd be waiting for there, if that was anything apart from gold or silver, would be a higher low, and I'd be very keen to trade that.
Yeah. Does it break? I mean, that's what you'd want to see, isn't it? You want to see it break out, and as you say, you say a higher low down here.
Yeah, bounced off that trend line. Yeah, come back into there.
Yeah.
Nice.
If it was to do that, I think we're starting to journey to the upside with gold. I suppose the question still hangs with gold and inflation. That the Aussie statement I thought was really interesting because it did mention inflation, and it was quite keen to talk about inflation. But does that mean that we are going to get inflation which is going to be of massive proportion, or does it mean that we're likely to get a bit of inflation and then things start to cut back again?
Well, that's what they're saying, or that's what they're suggesting.
That's what they're But it does suggest that if they all start talking inflation, the inflation story up to the point that we are looking for an inflation bounce, then it does suggest that we may well have a bit of a bottom here with gold that does start to move further to the upside, and if it moves further to the upside, then things can be made safe, and then you know, if the inflation story starts to turn around, then I suppose some of those trades could be made safe.
I think
was
they're
hoping
terrified of inflation at the moment, though, aren't they? The central bankers, because of what it means. You know, without the employment story going with
yes,
it,
yeah, yeah.
they've got to be terrified, because how can they possibly justify raising interest rates if nobody's earning any money?
Yeah, yeah. Which was one thing I thought was quite interesting from the central bank as well. The unemployment kind of the statement was that they were back to employment numbers before the
Pre-COVID.
pandemic, before COVID, and yet the unemployment numbers are high. So there's obviously sort of a bit of a disconnect with the statement. Now, you know, you can obviously kind of fill in the gaps with that. But people are still claiming sort of unemployment. There's obviously unemployment claims going on there.
Well,
While
you wait till the next number on the Aussie, it won't be 5.8. I can give you the big tip. It'll be more like
really?
6.5 or
really?
more, because all the stimulus has now run out. You see, and the way that Australia did it was they gave the money to the employers rather,
Right.
to keep their staff on.
Yeah. So they furloughed, did they?
Yep. So
yeah, same as us.
Once that money's gone and it's no longer there, the unemployment is just going to, I won't say skyrocket, but it's definitely going to increase, not improve.
Well, this is something that I think
yes,
is
John, exactly right. Yeah.
On the cards. Let me just have a look at this.
And I suspect that's going to be worldwide.
What's that?
We're going to see bad unemployment numbers coming up, I think.
Yeah, well, this is. I think this is quite interesting here, mate, because what we've seen with this is the UK. This is the employment rate in the UK, and we're starting to see. Let's do 5 years. Obviously, a big spike where the employment numbers were, you know, starting to move to the upside. In actual fact, what I probably want is, let's have a look at claimant count instead. Let's have a look at this one instead. So claimant count started to jump to the upside in April, but look what's happened. The furlough scheme came in and it stabilized, you know, really well. But look, it started to jump. January 2021, it started to jump up again. So, you know, the unemployment numbers, unemployment rate, this is a better one to probably look at. The unemployment rate in the UK, really, it has started to rise. You know, the furlough scheme is, you know, it's coming to an end, and we're seeing these unemployment numbers starting to rise again.
Mm-hmm.
If we look at the 5-year average, it was down, and then it started to rise again. So even with that furlough scheme, it didn't really, you know, help things out as much as they would have liked. Now, if we compare the same thing to the United States, let's have a look at the unemployment numbers here. Look how it's falling. A completely different picture. And we furloughed, and the United States just gave everybody
both lots of figures a month to month. Yeah.
Yes.
Mm-hmm.
Yes. Yeah. So their route to protect their economy was almost the opposite. You know, in as much that they just gave people money just to kind of get through, and they allowed business to do what they do. Which is lay people off, and when they're ready, they'll probably go and hire them again. And I think there was probably a probably a big question and a big argument between central banks about the best possible policy. And as you say, you know, we're starting to see that the numbers starting to jump again in Australia. Maybe they haven't happened yet, but you're anticipating that. But we are starting to see the numbers jump in the UK. And also, as you rightly point out, the average weekly earnings. So if we have a look at the hourly earnings for some of these as well, it's really dropped down. You know, that's the United States. If we look at Australia, that's Austria. Here's Australia here. where we got it? Wage growth, that'll do. Just dropping off, and this is the concern really for the RBA, isn't it? That an inflation
Yes.
picture coming in without wage inflation and a lot of slack. So just so people understand that term, and I'm not kind of saying this because I'm expecting you guys to be not educated in this, but I didn't really understand what this term meant for a while. But when they talk about slack in the labour market, it's effectively saying there's a lot of people out of work. We haven't got a tight labour market where there's a lot of spare capacity. There's a lot of people just waiting on the sidelines. So when they talk about slack in the labour market, it means there are a lot of people that would take, there's probably 5 people that would take one job, for example. And you don't get wage inflation in that kind of environment because there's an oversupply. So where workers are a commodity, there's an oversupply of that particular commodity. So if prices start to rise, then it could be pretty damaging for the people at the lower end of the wage scale because their wages aren't growing. And I think that's what we saw in some countries. And let's have a look at the UK. This is the United Kingdom, and what I want to see is wage growth. Look at what's going on here with the wage growth, where it looks like there's positivity with the wage growth, but then when we start to look again at the unemployment rate, all that's happened is inevitably the people that are likely to get laid off are the people at the bottom end of the market. So the lower end earners have been expelled or at least asked to have some sort of sabbatical from their company. And it meant that the higher end earners stayed with the company. So the average weekly, the wage growth looks a lot better than it actually is. That the number's quite skewed in many respects, and it's distorted because it looks like people are starting to enjoy it when you look at wage growth, but it's just not the case. It's just that the higher end workers remained in their jobs and the lower end workers went. So the wage went up, if you like.
Yeah, look, all of those numbers have belied my understanding of anything over the last 6-8 months, because how can unemployment be falling year on year? I get it month on month, but year on year, how can unemployment be falling? Doesn't make any sense. Because, prior to let's say January or February 2020, there's no possible way that unemployment can be falling based on figures before that. In my mind, the logic tells me that can't be the case. So I don't understand the inflation story. I really don't. How, and John, to your question, how can they stop it? That's for an economist far beyond my pay grade, I'm afraid. I've got no idea.
How can they stop? How can they stop inflation? Well, I mean, they do have certain tools. I mean, that they can do things like mess around with the yield curve. They can mess around with the rates, further out and stuff like that. Yeah, well, yeah, so you're right, and I was saying this to somebody yesterday. I was sort of saying about inflation yesterday, and they said, "Well, it's already here." And I think that's the thing. I think a lot of people on the ground are feeling it. So the numbers are sort of almost suggesting one thing, but we are seeing something completely different. When you see CPI is kind of rising by a point or something, and we know that the price of bread has gone up by 20%, then you kind of question how they're generating these figures. Where and how are they generating these figures from? So I think a lot of people are feeling it. A lot of people are feeling a squeeze in the inflation numbers. So you're right, John.
Where do they come from? Where do they get these numbers? I mean, for instance, and I'm sure every country in the world's the same. Private insurance, right? my private insurance goes up every February or March or April. I think it's going up this month.
Yeah.
Every April without fail.
Yeah.
How does that work?
Yeah.
What's
Well,
gone up in that 12-month period? The
your
price,
age.
the price of beer. Sorry, my age.
Your
Yes,
age becomes
that's true.
you. Yeah, you become more of a risk for them, I suppose. I mean, that would be that's surely how they calculate it, isn't it? If as the older people get, then the more they like to have to pay out
Well,
for insurance.
that depends on a demographic, I suppose, which at the moment is skewed towards older people. Yes,
Yeah.
but certainly in developing countries, in developed nations. But how can they justify that without fail? It's going to happen, regardless of what's happened in that 12-month period. This rate's
Yeah.
going up on, let's say, the 4th of April every single year. The price of beer goes up twice a year without fail, no matter what.
Yeah.
Why?
Yeah.
Every January and every June. I know
Yeah.
this because I know this
Yeah.
very well. There's no question. There's no negotiation. There's no anything. It's just, okay, beer goes up on the 1st of January and it goes up on the 1st of June. That's it.
Yeah.
Or 1st of July. That's it. Good luck.
Yeah.
Pay
Yeah.
more, drink less, whatever.
Yeah, and I suppose what we're seeing is the increase in some of that in that stuff. The increase in some of the stuff probably being more elevated than normal. They always go up, as you say, but maybe the elevation rate is higher than it has been historically. So
But
yeah, I mean, it's
again, the question is, how is it justifiable? Because it is inflationary. There's no question.
yeah.
Yet there's no wage growth anywhere in the world that I'm aware of. Real wage growth anyway. Unemployment's rising or about to rise, in my humble opinion. It has been falling over the COVID period, month on month, and I get that, but I don't get it year on year. So that's going to go up, in my humble opinion.
Yeah.
Wages stationary, less jobs because there's not until, of course, COVID's the answer to everything. If there's no COVID, then we go back to normal. But whilst we're in this position, how are employers, now that they've lost their stimulus from fiscal policy, how are they possibly going to employ more people? They're not. They're going to lay people off.
That is the case, mate, and maybe another or a more worrying statistic is the okay, we'll talk about that, John. Actually, the more worrying statistic is probably how technological advancements are going to put a lot of people out of work. The fact that we have got self-driving cars coming in is just the end to a whole region of transport workers. And okay, yes, you're going to need people, and they're talking about retraining people so they can build this stuff.
I want to learn how to be a smash repairer.
A smash repairer? What's that?
Someone who repairs cars after they've smashed into something.
Oh, right, yeah. But this is the thing, they're talking about like getting people to retrain so they can engage in the modern world. But the trouble is, they will all they'll be doing is running more robots. They'll be sort of like using robots and robotic machinery that effectively kind of makes the job even easier. Car plants have been full of this stuff for years. Full of this machinery that there are effectively robots that have been building the cars, and I think that's the biggest worry, because if then you really will get a slack in the labor area, because there'll be a lot of people looking for work when
there's an argument
cars.
from those who make robots that they will create employment, because you'll have to have more and smarter programmers to run them and maintain
absolutely
them.
But surely that means that you've almost got to have a specific a specific education
Skill
to
set,
go
yeah.
into that. Now, a lot of people either won't be able to afford it, or just aren't that way, just aren't built that way. You know, what happens to the kind of guy who is incredibly you know, they're really good physically, but they're not as good intellectually. What happens to that person? You know, I've got a friend who's got a boy who's awful at school. He's terrible, but he's the loveliest kind of like friendliest character that you know you'd hope to meet, and he's the kind of guy you'd want in a company somewhere, because you know that you know, companies aren't just built on people that work well. There's personality and character and people you can trust. There's all
Well,
sorts of different
that
aspects.
used to be the case. I'm not sure it's still the case. I've been
Well,
out
yeah,
of the
maybe you're
workforce for
right,
many,
mate.
many
Maybe you're
years, so
right.
I don't know.
But what happens to people like that? You know, and there's a lot of people like that, you know, in the world that
Sure.
that you know they are much more likely to be able to do manual labor. But manual labor and the heavy lifting is getting taken out the market by what's happening with the surge in robots, and you know, there's going to be a lot of people without jobs. I think that's the thing that that would
It certainly shapes that way, and that most famous of manual or famous of Spaniards is probably going to, I guess, robots still can't dig ditches. Well, I suppose they can, and they do to some degree.
yeah,
They do to some degree, because if you see roadworks these days,
exactly,
they're all run by satellite.
right.
The operator, have you seen that?
No.
Yeah, well, that's how they get their straight lines and their curves and all the rest of it.
Oh, really?
They've all got sensors on top of their machines,
Oh.
and they just sit in there and make sure there's petrol in the bloody thing, as far as I know.
Well, there you go, mate. There you go. Every sort of aspect of what's going on is getting taken over by machinery. So there's going to be a huge aspect of slack in the labour market then.
Yeah,
So John,
extremely interesting subject.
yeah. Okay, so it's Master James is going to be right, John. Yes, you will always need a supervisor, but that is only one job, Greg. That's the problem, isn't it? It's only one person's job. I don't know. Maybe I'm wrong, but I would have thought there's going to be a lot of people without work.
The robots will kill him, and they'll have to put another one on, and they'll kill him, and they'll have to put another one on. Haven't you seen?
So I'm just going to talk about silver. Okay, so there is these guys. There's a few different ones you can look for. Real silver. Now these guys. I mean, I'm talking about UK companies, and I'll tell you about a couple of ways that I think it's worth doing. Real silver you can buy from an exchange, but make sure that you buy from somebody decent. Bullion by post. There's a guy in the States called Mike Maloney. Look up Mike Maloney. He's in fact, let me type it in here for you. He's done a big program on YouTube called The History of Money. Fascinating program. Be careful, because it's very conspiracy theorist and scaremongering. I think there's a lot of genuine information in there. But be aware that he is a silver and gold. He's a gold and silver trader. So it's in his interest to make sure that we are quite scared about the financial system and want to buy gold and silver. So look for Mike Maloney. And also, if you look at the Royal Mint, this is something that I think is really interesting. The official Royal Mint, okay, these guys, UK, and they hold gold and silver and everything else. But look what you got here. DigiGold, digital gold. And this is a lot cheaper to trade in than actual gold and silver. But you can't see his name. Okay, mate, no problem. Why can't you see his name? Can you see his name?
No, but you've raised my curiosity here.
Oh yeah, well with this
DigiGold.
DigiGold, yeah.
The concept escapes me.
Okay, so it's basically like physically backed. All gold, silver, and platinum is backed with an investment grade LBMA approved metal. So what happens is you buy an ounce of DigiGold, and there is an ounce held in the vault. And the reason it's cheaper is that you are buying a digital coin, I suppose. So maybe it's the transaction fees are just much cheaper. I'm not exactly sure. That it is explained on here somewhere on the website, because I've looked at this before. But you will find that it's cheaper to do the deal with DigiGold than it is, or DigiSilver. You can buy DigiGold, DigiSilver, DigiPlatinum, all this stuff, than it is to buy the physical. And it's from the Royal Mint. So it's not like it's like a crypto website or something. It's from a place that I would trust. I would trust the Royal Mint to kind of be a here we go. Read more about why buy DigiGold. Isn't just for heavyweight investors. You can put your money into gold with prices starting from as little as $25. So you can go, you can buy it really, really cheaply. It's affordable and easier to budget. Unlike coins or bars, DigiGold is apportioned by value, not by weight, which results in straightforward transparent pricing. It comes in the form of
large. What does that actually mean, by value rather than by weight?
I think because if you go out and buy gold from something like Bullion by Post, you have to buy it by grams or ounces.
Which has a value, yes.
Which is a value. Whereas if you go to DigiGold, you can say, give me £25. Actually, no, give me £25.50. No, give me £26. And it will apportion a certain, however much gold that's worth. So it can be a lot more kind of pinpoint.
Minus the spread, minus the exchange rate, minus the fee.
Yeah. But ultimately, you can choose.
There, done that.
You can choose how much you invest rather than having to buy in increments of weight. Yeah.
Okay.
During asset, there's no VAT to pay. Digital gold is VAT free, so that's another one as well. Another reason it's a bit cheaper. So here we go. Available in a wide range of prices. DigiGold, yes. Gold bars and coins, no. Gold is owned by you and not owed to you, and yes. It's VAT free, yes it is. Capital gains tax free, no it's not. What gold is. Options to store in the vault, yes, and it's 999.9% fine gold. So it's
okay. So options to store in the vault. It's digital. Okay.
Yeah, it's digital, but they actually do buy they do assign the weight of gold.
Okay, so let's say I put $1,700 into DigiGold at the moment, right? That should buy me an ounce, right?
Yes.
In round terms.
Yeah.
So that then my $1,700 goes into the Royal Mint's consolidated revenue account, and they put aside 1 ounce of gold in the vault for me.
Yes.
At a cost of how much per month, week, year? There'll be a cost attached to that, surely.
There's a little cost, mate, but it's not a lot. I mean,
No.
I could go through the whole website, but it might not be for everybody to have a look through it now. But it's not a lot. It's not a lot. I've bought some.
Okay.
I bought some.
And you're happy with that?
Yeah, I'm happy with it. Yeah. I quite like it. I bought some from these guys. I've spread my kind of gold and silver buying around a little bit. Yeah, take a look at that one, John. And also check this guy out. So this is the guy, Mike Maloney. This is the thing.
Question tomorrow, by the way.
Oh yeah. Don't tell people what the questions are.
Oh, sorry.
So here we go.
Might not be.
This guy, Mike Maloney, Money versus Currency, really interesting. It's called the Hidden Secrets of Money episode series. So check that out. The Hidden Secrets of Money. It's really, really interesting. And if people don't understand NFTs and the non-fungible tokens and all this sort of thing, then the great thing about Mike Maloney is he goes into fungible and what's the difference between fungible assets and non-fungible assets. So that's for him to look at. And if you look at goldandsilver.com, then you can buy from him as well. Okay, buy precious metals, sell to us. So goldandsilver.com, and it's all Mike Maloney, and you'll really like him. You know, I watch his YouTube shows every week, but you do always have to remember he is a gold and silver trader effectively. So it's in his interest to kind of get us to the point where we all want gold and silver. So that's how I would do it, mate. That's and the good thing about Mike Maloney is, regardless of his bias, he actually is well worth watching him, because he gives you a fast track education into gold and the history of gold. And if we had the time, and we were still running the show, I would suggest us sitting down and watching it together, everybody, because it's brilliant. It's a really interesting series. But they're long. You know, this is I think it's a good couple of 25 minutes for episode 1. I think it might be a couple of hours. So you get to episode 5 here. Not sure if this is episode 6. So episode 7. So yeah, they're half hour. Episode 8, half hour. So you could be looking at a good 4 hours worth of. Oh, is episode 10. So,
so that would give me a good basis of understanding a gold chart, perhaps?
No, it would give you a good basis of understanding gold, and because he goes right back to the history of when gold was first used. And his argument is that we always come back to gold. When things collapse, gold is, and they've tried to distill gold before by adding lead and things like that, to pay for wars and whatever else. But ultimately, when things crash, and he says that there is in history, in actual fact, maybe we'll do it tomorrow. But in history, do you know how many fiat currencies have survived?
No
if
idea.
We think about, I think 100 years.
No idea.
Have a guess.
3.
Gyra's right. None, not one. and we keep coming back to gold, and this is why this is where you start to like watch this stuff and go, this actually really is quite interesting. And you got to be careful not to get fearful with it, but it does start to make you realize that if you haven't got gold in your portfolio, you could be missing a trick. Buying Bitcoin. Yeah, he goes away from. In fact, no, he does buy Bitcoin. Buying Bitcoin's I think also a really good idea, but I think you've got to back things up with gold. And his series really does kind of put it onto into your sites. It helps you understand how gold has been used in the past. So, but not technically. He doesn't talk about charts really. Much more of a fundamental basis.
Cool. We got any trades?
Don't know, mate. If FTSE's pushed to the upside, so let's have a look at oil. I doubt it. How about you?
No trades. I've got some potential. So.
Okay, should we have a quick look through, and I'll have a look through while you're looking through.
Okay. Let's start with what we've already got, I suppose, and we'll work from there. All right, pound Kiwi. Do you think so? Gyra, look, I'm keen to get into it myself, but I'll go there in a second and show you probably why I didn't want to get into it just yet. Pound Kiwi. All right, we should all be in that if you're paying attention yesterday, and we're now getting a beautiful little retracement. If I look at H4, the only thing here that is of some concern, well, it is of concern, but we can easily switch allegiances here if we get what I'm about to describe. If we get a break above the daily pivot, and probably even the weekly pivot, or even a bounce off the weekly pivot would do, and a higher low, then we switch allegiances to the upside. But that said, I'm still of the opinion this is coming down here, and I've got a nice little confluence area, and I think I've pointed this out before. in that vicinity, around about 194.50 to 75, something like that. So I've got no reason to do anything on pound Kiwi except hang on. We've got a free trade on our hands in both directions. That's pretty cool. Aussie Kiwi, I've got an order in the market. Those of you who've just joined us and want to follow that, they are the parameters around which I'm trading. We're buying at 1.0876. Stop losses at 1.0842, and TP1 is at 1.0897. Now, as I said before, this could very easily go in the opposite direction. So this is a high risk trade. This candle here is extremely indicative of a lower high off a double top. So very easily could go this way. In fact, I'm surprised I'm not trading it, but I'm not trading it for the reasons I said before. And they are, I think we're in a range here between the pivots. We may stay there for a little while. And if that's the case, I'm okay if we get a false break of resistance. But I'm not okay to go short right now because we are at that horizontal level. We are still at the monthly pivot, and it's a potential false break of that. Otherwise, it's a classic, as I probably said many, many times before. If you've got a double top, you've got a clear lower high with a bullish bar, then you probably should be putting an entry underneath it with a stop loss above it. And why aren't I doing why am I not doing what I say? Because of the reasons that I've just given you. I'd much rather pick it up after this trade line breaks and we hit that confluence area as a retest rather than a breakout. But gee whiz, apart from that, it's pretty cool. Now, I mentioned earlier in the show that it'll be question mark time. Are we in breakout territory or are we in false breakout territory? So far today, I'm thinking false breakout territory. And we've seen this before, here, here, here. Every time we hit this level, we go back and we go back to the top of the range. So that's exactly what I'll be looking for here on pound Swissy. I know pound is bearish so far today. I know Swissy is on fire, but that doesn't belie the fact that we're at the bottom of this range and we haven't been below that level for some time. So it's going to be tough to trade, certainly on the 4-hour chart, because of this massive retracement at this stage anyway. We've got 3/4 of an hour to go before this closes. So if it closes on or around about the bottom here somewhere, and we can get up to here, maybe even hit the monthly pivot again, give us a higher low, that becomes a buy for me. Euro dollar, there's only one way I want to trade euro dollar, and it isn't long at the moment on the short-term time frame. But as I pointed out last week, yesterday, the day before, you can't deny when you see the bottom of these ranges and the top of these ranges that the next probable direction is going to be as a bounce, as always. And it's really hard to understand this, but once you understand it and get it locked into your brain, most breakouts are false by a huge percentage. Huge percentage. So when you see something break, don't just think it's going one direction. Most often it's going to come back and go in the opposite direction for a period. It may not last long, but for a period, this is what happens all the time. And everyone is thinking, oh, the euro's in trouble, it's going to sink, the dollar's strong, blah, 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 blah. All of that chat, all of that talk means absolutely nothing when you hit the bottom of these major areas, market structures. And we're witnessing that once again. I think if we got to pull back to the pivots, the monthly pivot and the daily pivot today, then we'll be looking very, very seriously at trading this back to here, maybe even back to the trend line. You'd be looking very seriously at trading this because really we've got a head and shoulders or inverted head and shoulders in place. We broke the neckline with this bar. The question mark, the only question mark that I've got over this, if that's the neckline, we didn't come back and retest it, which is why I'm not in this trade. I've got to tell you, otherwise I'm in this trade, but it didn't come back, didn't even test the daily pivot. It's just gone without notice. in my humble opinion. I mean, that was the notice, obviously, but if there's no entry there for me, I don't trade levels. I trade setups, and I didn't have a setup. So I'm still completely on the bull side for euro dollar, but what's to say we can't come back here and retest that trend line and that neckline? Nothing to say that. And we've got an untested daily pivot that's in a company with the monthly pivot. So going exactly what I just said on the bigger picture, the market structure here is telling me that we're going here before we're going there. So if I'm looking for a trade, I'm looking for a short on maybe a 30-minute time frame. I've got nothing to go with here. There's just nothing. This is garbage. This is rubbish. I can't trade it. I'd have to have a trend line of some sort up here and get a false break of resistance or a break and retest of support, not giving me much room for here. But, if you can pick up maybe a 10, 15 pip risk up here for 30, 25, 30 pip gain, then that's what you'd be looking to do. So maybe, as I said, 10, 15, you pick up 20 maybe. That won't be good enough to take the risk because it is counter momentum. But, a 2-3 to 1 trade down there makes sense. Aussie, as we spoke about earlier, we're now got a market structure that's saying go short. If we got a retest here of the daily pivot and resistance trade line confluence, then of course I would place an order short underneath here. I'm actually long on another account, which is probably getting near to my entry level. So I'm probably out of that trade by now. But I can totally see a retest here and a short. But again, if this is too long a bar and that's too long a bar, your reward to risk is going to be dreadful. And then you'd want to play the long off this area. Why? Because you've then got an established head and shoulders and you've got the bottom of a range. So to trade through there is okay, but you want to have something in the bank. You really do want to have something in the bank here and be safe before you hit that level, because likelihood is we're going back there. They're really the things that I'm looking at. There are others, of course, dollar CAD, and I'll have a look at Euro Aussie and a tick gyro, but they're all the same. This is very much a same thing that we're trading every single time. We're looking for reversals and higher lows. We got it on dollar CAD. If that was a black bar and I was in front of the charts, I might wanted to trade that, but it wasn't. So be it. I can't find another way into that. We did flag this as a possible trade this week, so I will keep looking at it. And you can see this beautiful trade line here. Beautiful because of the frequency of test and the amount of tests that it's had. If this is not the way forward, and remember I was looking for this shoulder, this right shoulder, we've now got it. A break and retest here really does get me interested, but we're going to take that high out. Keep your eye on that, as I've said all along, that's really looking good. Aussie Swissy looks to have gone, but like I said on pound Swissy or pound whatever it was earlier, this looks like a perfect scalping point to me. I'm not a scalper, so I won't be trading it, but it looks like a perfect scalp to me. I reckon back to here would be reasonable. Dollar Swissy was the same. We were flagging this, and gyro, there's your dominator right there on Monday. That was your trade. But of course, we're expecting a retest here. We haven't had it, similar to what I've described on the others. Euro Kiwi, I still want to get into the long there. Too tough at this point. And back to your first question, Euro Aussie, was there a way to trade that? Not on a 4-hour chart for mine, unless you traded that bar right there. That was your trade, because you've got high test. Bit wrong end of the day for me to trade that. Daily chart tomorrow, no. Or maybe. Depends. If we can get some profit in the bank before that level, maybe. But you're asking a big question there, because you're going to have to risk at this point 110 to get 40, and that's okay. I'd be in that. I would trade that as a dominator because of, this is still the case. This is the dominant point of this chart right now, and everything is inside it. Absolutely everything. As soon as this energy dispels itself, it's going somewhere. And I would say it's going up here. That's my humble opinion. That makes the Aussie a sell against the euro. And I've got to say, I'm not too keen about that. But look at this chart. It really does tell you everything you need to know. We need to be thinking long here. We really do. Everything's inside this bar as well. In fact, I don't know why I haven't got an entry there and a stop loss there. Maybe I'll do that tomorrow. We'll have a look at it. Joy, oh yeah, you missed the same bar as me, mate. You're either there or you're not, you know. And if you're not, you either let it go or you chase it. I'm not a chaser. Chasing doesn't work. Aussie yen short in D1 from Lewis. I don't think I've got an Aussie yen chart. We can fix that. Aussie yen. There you are. I'll answer that question, Jora. That's a good question. In fact, I'll go through that. I might even do that tomorrow for you early. Think for short on... No. Somebody just asked a question on... Aussie yen short on D1, as in daily. Yep. What do I think of it? Double top, lower high, consolidation. I'm not a massive fan, I've got to say. And the reason I'm not, I'll just go a bit wider. The reason I'm not a massive fan is we've got a double bottom sitting here. We've got a double top sitting here. That suggests to me that we're going to range in here for a while. Let me put that range in. So there somewhere. And we haven't yet hit the top. So we're in no man's land. If we were up here and got a lower high, then I'd be happy to say yes. But at the moment, I see three pivots very, very close to price. I see price doesn't want to go too far away from that zone. So I'm guessing, I think, at the moment, unless you've got a good reason to think the Aussie is bearish and the yen is bullish, which you may have. I mean, fundamentally, that may well be the case. And look, this is the best pair to trade fundamentals on or to trade market sentiment on, without question, because the Aussie is a risk, pardon me, a risk on currency, and the yen's a risk off currency. So if you've got a market sentiment that suggests to you that we're on or off, this is the one you want to be looking at. Absolutely. I don't have that at the moment. I'm not sure what market sentiment is, frankly. So I've got to pass on this one, I'm afraid. And I think we're up to date.
Fantastic, mate. Fantastic. Well, let's call it a day for now. We will be back tomorrow with the quiz, and the quiz is going to be based on the things that we discussed during the week. We're not meant to be giving you any clues, but we did this week.
Did we give some clues?
So yeah, we're gonna have 10 questions. So it won't take long, but just for a bit of fun when the market's a bit quiet.
All right, I just heard from Ainsley. She's ready to go. She's got the daylight saving trap, I think. So sorry about that from Ainsley's behalf, but we'll be definitely looking with Ainsley next week at gold and oil.
Fantastic.
All right, but all right. We'll swap. Will we get the questions ready for tomorrow? Or
yes, we will. Yeah, let's write some back and forth now, and I'll put them in a PowerPoint ready.
Happy days.
Okay. Thanks again, everybody. Thanks, Angel, as always, and thank you to you, mate. I will see you in the morning.
Happy days, mate. Have a good one. Have a good one, everyone. Bye.